And it's time to do 55 minutes of business. It only happens here on Channels Television. The program is Business Incorporated. Here's what we have prepared for you for this episode of the program. In Ghana, the construction of a 300,000 barrels per day oil refinery has just started. And in Egypt, residents will have to pay 50% more on their electricity. Sadly, in Nigeria, the queues are getting longer and expanding in different parts of the country. Good afternoon, I'm Ini John Mekwa. This is Business Incorporated. We start today from the global space as usual, but from gold. Gold held steady. Yeah, it's record high on Tuesday as investors await U.S. Federal Reserve's minute and Chair Jerome Powell's speech. That's supposed to indicate how much the central bank will cut rate this year. Take a look at the numbers right here. So it's spot gold looking up right there, 0.2%, $2,500.08. That's record high that it's maintaining right there. And then for U.S. gold futures, it's 0.1% in the green, $2,537.70. for U.S. gold. And then holdings of SPDR Gold Trust Gold, which is the world's largest gold-backed exchange-traded fund, jumped to their highest in 7 months at 859 tons on Monday. Looking at other metals, we'll see that spot silver fell on the flip side of compared to gold. There you have silver down 0.8%, $29.25. Platinum was, however, up at 0.6%, $958.95. Palladium was down again 0.8% at $924.75 per ounce. And then the global oil space now prices steadied on Tuesday. Remember the morning we saw it in the red, and it's flipped this afternoon after following 2 straight sessions as Israel accepted that proposal to tackle disagreement blocking a ceasefire deal in Gaza, ease supply concerns. There we see there it's gained this afternoon 0.24%, $77.85. They're still within the $77. And then for WTI of the United States is 0.26% in the green at $73.85 a barrel. And of course, we know the tension going on there. And then in Libya, the Sarara field, they have started their production, resumed their production, and that is giving some confidence to supply in that market. And then moving on, right there, we go to Ghana, where President Nana Akufo-Addo has broken ground on the construction of a 300,000 barrel per day oil refinery that the government hopes will turn the West African country into the region's petroleum hub. But critics say that the project is flawed. Ghana, the world's second biggest cocoa producer, became an oil producer in 2010. Output is currently around 130,000 barrels per day crude oil and about 325 million standard cubic feet every day of natural gas. Phase 1 of the project, estimated to cost $12 billion, will be funded and constructed by a consortium of Touchstone Capital Group Holdings and Energy Ghana, as well as China Wuhan Engineering Company. And China Construction Third Engineering Bureau is also part of the party, and they say that it's according to the announcement that was made. Well, West Africa consumes about 800,000 barrels per day, according to African Refiners and Distributors Association, of which almost 90% is imported. The petroleum hub aims to supply enough refined and byproducts to supply the region by 2036. Well, I guess, will Nigeria now be importing from Ghana by then? I wonder. But I guess if we don't get our acts together, then, having the biggest deposit of crude does not assure anything. And, well, that's what we are seeing in the country now with those few queues. Earlier today during Business Morning, we spoke to Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, and he shared his thoughts on some of the reasons he thinks that the fuel queues are back in the country in spite of the potentials and even the laws, the PIA, and other steps that the government has taken before now.
Today, people are buying petrol at 1,100, 1,200. They're buying diesel at 1,200, which is one is deregulated, one is regulated. But you can see that the effective prices are the same. So as far as I am concerned, and as far as any economist who knows what is sought is concerned, you must have equilibrium in markets. And equilibrium in markets means that aggregate supply and aggregate demand will intersect somewhere and the price will be there. If there's a subsidy, come out clean and say, okay, we are subsidizing this. Are you subsidizing production or consumption? And if the subsidy is there, then let's know and let's come clean. And now know so that we don't create rent seeking and people come out in the market, which is what has happened. So right now, the inefficiency of the system, the logistics, inefficiency of the market structure, the inefficiency of the pricing system is leading to all these distortions. The effect of it is that people are suffering. There are people who cannot even get to the hospital because there's no petrol. And we are losing lives, quality of people that have invested in their education and they cannot get to the hospital. They die and we lose their output. So it is a major issue. And we have, as a country, we have to come to terms with the fact that we cannot afford disruption. We are an oil-producing country. We have refining capacity. We have tankers. We have petrol stations, and yet we cannot get petrol to the people.
There you have it, inefficient structural problem, and then inefficient pricing system, and then the look or the search for truth. Those are the views of Mr. Bismarck Rewani. Let's find out what Dr. Wisdom Enang, an oil and gas expert, has to say about this. Dr. Enang, good afternoon. So the issue of subsidy or no subsidy comes up again. The NNPC say they have not paid subsidy to anybody in, I think, 9 years. But perhaps we should know the landing cost. That will help us to know if there's a subsidy, and then we can now look for where it's being paid from, you know, and all the controversy around directives for NNPC to pay, use revenue and all of that for subsidy and all of that. Perhaps you are in the industry, please, do clear the air. We're looking for the truth.
Thank you very much, Jenny. The thing is, actually, there is some sort of subsidy, but for some time, the government has been calling it the price cap. And what is the landing cost? It's anywhere between 1,150 to 1,250. That's what we're looking at, depending, because there are a number of factors, the amount of volume that we're getting in, as well as the exchange rate at the time. Now, when you consider the guide price of about 620 for most retail stations in Lagos, all the way to 650 on a normal basis, you find out that definitely there must be someone is paying for the difference, and that's the government. And definitely the government is doing that through the NNPC, which is the sole importer of PMS in this context. So definitely we are paying subsidy, although they've been calling it a price cap. But I think my biggest worry is the opportunity cost of the recent release from the presidency for the NNPC to defray the cost of the subsidy using some of the money they're supposed to send into the federation accounts, because that affects the states. That also affects being able to fund that budget. So definitely there is an opportunity cost, and this kind of begs to ask the question whether or not the subsidy thing is very sustainable in the long run, or whether we should be looking at actually boosting our domestic production capacity to be able to meet our energy needs.
I guess that speaks to, I mean, a lot of uncertainty and maybe and suspicious and allegedly, you know, all around that. We cannot categorically, because the government will not categorically tell us if they're paying subsidy or not, and yet we know the landing cost and we know how much we're paying, you know, at the pump. Who's paying for it? Is NNPC paying for it? Has NNPC remitted, you know, anything to the federal national coffers and all of that? I guess that's why someone like Mr. Rewani will say, we need to know the truth, and then perhaps we can move on and solve our problem transparently.
Absolutely. I mean, there are a number of nuances that that characterize the entire sector that we need to know. For example, subsidy is one thing, but we do also know right now that the problem. I mean, it's been tagged an evacuation problem by the NNPC. But what we do know is that a lot of the people who are supplying PMS cargoes to us either need cash or they need crude cargo in return. And when we're not able to get that agreement in place, that is one other problem that comes, and then we begin to have sort of shortages in our supply volume. We also do know that a number of these people that supply crude to us are, the frequency that we do receive this crude, this PMS, I think is every about 60 to 90 days, and that's because we do not have a strategic storage reserve for us to be able to buffer our supply, have a supply buffer that if we do not have, say there's something that goes wrong contractually, there is no supply at that material point in time, it will not ground the entire country to a halt. So the truth is, the devil is in the details, and we need to get into the detail both from the economic standpoint, from the supply standpoint, from the infrastructure standpoint, to ask ourselves critical question: how are we going to end these kind of deja vu that keeps coming on and off on the fuel supply issue? And every now and then, if we cannot do anything in 60 to 90 days, to get new inventories in, we have another set of queues come up, and that's something a conversation I think we need to start having. How do we get a more permanent solution to this problem?
I guess a permanent solution, Dr. Ndang, would be that we have local refiners, and we hear a lot of local refiners, the modular refineries, Dangote, asking for crude so that we can have at least a bit of stability, certainty in the supply value chain of petroleum products in the country.
Yeah, absolutely. I mean, that's a sustainable solution because, I beg to differ with the idea from the NMDPRA that we should import to be able to shore off, the possibility of a monopoly. I don't believe that's sustainable, just because, whenever you meter out any solution from an economic standpoint, you want to compare that solution, the benefits of the solution to the side effects, in this case that we're talking about, the economy. So yes, that's a very good one. And the other thing that I'd like to mention is when we're looking at the concern of monopoly, increasing supply is one way to prevent it. The other way is, as we're giving out our crude supply in Naira to the domestic refineries, which I hope we can give up to the 450,000 barrels a day that we're looking at, that we do put in some anti-monopoly clauses within there to make sure that, yes, they do take it in Naira, they do have the supply. That means they don't have to pay logistics costs, they don't have to pay all the insurance for bringing this crude, compared to bringing it from abroad. But that when they eventually do put out their pricing, that pricing also considers the effects of and the benefits of getting this crude supply in Naira. I think that's the way we should be thinking about, and making sure that we help other refineries to come on board. I don't think importation is going to help us, and I think we need to start building strategic reserves for PMS. I'll give you context. The US, for example, they are, they've been producing for as long as we know, but they do have a strategic storage, and at some point they were actually importing when the prices was fair enough for them to import. They were actually importing and storing crude. So there's nothing wrong with actually producing PMS in this context, or producing refined petroleum products, and also building strategic storage reserves to be able to store them. And I think we can achieve these by using the build, operate, and transfer model. Put some icing on the cake, get some investors to come. That's the midstream sector. Get some good tariff, get some good offtake agreements that you would make with them, a storage agreement, tariffs, and then get them to come in there and subscribe and build those strategic storage for us. And then we know that at every point in time, we do have maybe a year's inventory. So if anything happens to our supply agreements and we cannot get filled in, we always have something that will give us a buffer, and then we don't have scarcity, fuels, and price hike. And remember, whilst we were talking about Lagos, the SKUs in Lagos, there are states like Akwa Ibom State that has always had to pay over 900 Naira for fuel. And that's a normality for them, and that shouldn't be the case. If we have the right, supply imperatives in place, shouldn't be the case where some states are paying as high as 900 to 1,000, and that's normal for them. That shouldn't be the case.
All right, so I think the other thing is the promise that the crude for Naira will start on October 1. Talking to a couple of stakeholders, they're saying, I mean, we're talking about availability of crude first before we see, it being available for the Naira. And that makes that promise even a bit shaky at this time.
Yeah, I mean, you're right. At the moment, we're struggling with our production rates because I think it's about 1.3 at the moment. Before now, in 2023, we went up to 1.5 daily production million barrels daily production. And, we're asking ourselves, do we truly have the volumes to give? So it's good that we have a guide volume that we're expecting. The 450,000 barrels is the guide volume that we're expecting to give to those refineries. However, we need to do a lot more. Tackling theft is going to bring us some more incremental volume, but I think there's a ceiling potential on that. What we need to start doing is to start looking at reliability. How do we improve our facility reliability to flow a lot more volumes in there? How do we do some primary interventions and even secondary interventions to bring up more volumes in the wells? How well do we, help the investors that are coming to the bid rounds to quickly start their exploration and production activities? I think it's quite good that Nigeria is leaning more on the side of production bonus than signing up bonus for our bid rounds, and that's a very good thing, and I'd like to encourage that. So there's enough that we need to do. There's a number of things that we need to do to bring back more production volumes if we need to be in a position where we can meet those sort of obligations of giving 450,000 barrels to the local refineries in Naira.
All right, a whole lot of things to do there. And eventually what we want is energy security, petroleum products, electricity. It all boils down to that. Well, thank you so much for your time, Dr. Wisdom Enang, oil and gas expert.
Thank you. Deeply appreciate.
Let's take a break now. When we come back, we'll head to the market with Will Ibong. Welcome back to watching Business Incorporated on Channels Television. We'll head to the markets now for intraday numbers with Will Ibong.
Any good afternoon. It's a bright day, very, very bright. I'm hoping that the numbers I'm seeing from Africa and from other parts of the world.
Yeah, well, we saw this intraday yesterday, and then we saw something else.
Well, right now I'm staying positive because the market shifts any way it wants, and today might be just that day where they push that needle and move it to that point.
Yeah, I've been warned that any day I wear red.
Oh, Ini, please. So keep the red thing round of today. Okay, but I'm sure that today is going to be very good because looking at the sentiment, it's quite like cautious, mixed, like neutral. So the market might just stay in the flat rate.
Yeah, maybe some investors will prefer to take advantage of the price drop from yesterday because it was a huge one.
It was a
more
huge
than 1%,
and we lost that support level that we have, that 96,000.
So perhaps we
will see a change today. Let's just see, and maybe that red thing would not work today. But let's see how major markets was already on the screen there. Positive sentiments at intraday. We see Nigeria's NGX. In the marginal, but in the green, 0.04%, but still at 95,000, losing that 96,000 level yesterday. And South Africa at intraday, we see it's also in the green, 0.02%. Also, Egypt's EGX30 is performing way better than it had on Monday, than it did on Monday. We saw it up today by 1.65%, up 29,000 level, 802. That's a great one for that index. And Kenya closed Monday's trading session in negative territory. It was down 0.1%. We hope for a flip to positive territory at the close of business today. But let's get a sense of what's happening at the NGX. And we're going to be talking to Abdurrashid Momo. He's an equity trader at TLW Stockbrokers. Good afternoon, Abdurrashid. It's good to have you on the show. Abdurrashid.
Thank you.
All share index went below the support level of 96,000 level yesterday. Help us to understand, based on, the historical patterns and, your charts, the potential consequences of losing the support level.
Okay, well, let me give it good news so far. We are up by 0.09%, which is okay. The market seems to be kickstarting again all the losses it's been going through, but it's still a marginal market. What you need to know was, the market has been going down lately, because of some heavyweights. I think heavyweight of Dangote cement. But I call it a bullish down day, because we had more gainers yesterday than losers. But that single act of Dangote cement dropping was actually that made the index drop. Now, looking in terms of technicals, I did say we're looking about the 96,000 points level, and the market is down by about 95,000 plus, close to about 96. So I still feel there's likely going to be recovery within that period. So as we watch, the market is actually fighting within some support levels. If the market stays, we are likely to see a rebound back to about 98,000. If it falls again, then we might be looking at about the main key is just watching the current support levels, and that's why the index is actually reacting to this marginal movement to the top side for now.
Okay, so you mentioned Dangote sugar. Dangote cement, which was the culprit yesterday that brought down the market. It lost 59 naira, about 59 naira in yesterday's trading session. But I just want to know, and people would like to know, are there any market conditions that are amplifying the impact of Dangote cement's price drop? Is there anything pushing that sentiments, pushing the share price down?
Nothing really. It's just normal market condition. If you look at this, the same thing with Geregun stock. Most of these high price stocks are actually on full offers. We are not seeing bids on the other sides. And with this recent movement on, you can see stocks like Owando. I think some shareholders just want to get out and invest money perhaps into their public offer and their rights. But with Dangote at this price, there's no buyer. So anything about in terms of Dangote, I don't think there's no financial, nothing. It's just pure market sentiment.
Speaking of market sentiments, how do you think the investors are reacting to the fact that, what do you think, let me just phrase it this way, what do you think the current market trajectory will be going forward? What do you see?
As I always say, I go to the technicals. The market has a cycle, and the market cycle actually peaks. Market cycle actually peaks during the period of the worst period of the market starts from July, right? Let's say from July, we start seeing markets coming down, and these are the periods when we see like fund managers going on holidays. So that period, we see prices coming down, and as prices go lower, we'll see a form of, let's say, traders coming into the market. So as I said, as market is into this phase of a bearish trend, we expect some corrections in the next, let's say, next 2 months. Because if you look at the whole market scenario, right, let me just give you markets normally oscillate from October ending, November ending into December. We always see a bull market, and the bull market actually peaks in around May. That's why we have that selling May and go away. Then we'll see some rallies entering as far as July. But after July, we start seeing markets actually drop. So it's more of a correction. We don't see anything. All financials so far coming into the market are still very okay, but market is just the word is market is just taking a correction of the table. But for traders, as we see prices go lower, they take opportunities, they buy into the weakness and sell into strength. So it's just a cycle. So there's no panic at all for anybody trading the Nigerian market for now.
You spoke about the correction, say, in the next 2 months, we'll probably see that. But what are the alternative scenarios here? Take, for example, this correction does not happen. What alternative scenarios should investors be considering if the current predictions do not occur?
I'm very sure of that. Do you know why? If you look at, I deal with data from 1998 to date, a period of December, especially December, right? Out of let's say we're having about a market has only lost from 1998 to the market has only lost 4 times in the month of December. We start seeing a lot of activities happening from the ending of October into November and December. So it's a cycle that plays itself. As well, tell people you don't have to be in the market for the whole year trading. You can be in the market for these 3 strongest months and you make all the profit you want to make for the year. So as it is now, the market is going through that same cycle. It's a cycle that repeats itself all the time. It might not be the same kind of month, but August has shown to be the weakest month in the whole of Nigerian NGX. So if your strategy, you might pick up the strategy and say, okay, during the period of August, I actually want to buy shares as they are going lower. But because most people that have bought those shares in August, there's possibility that they're going to make back those monies in the period of December into January, March. So that's why I'm saying it's a cycle and it happens all the time. And it works well. As long as the companies are still going to give you, they're going to pay dividends, right? So there's still going to be possible chances that the market is still going to rally. Mind you, the market went very high this year. The market went as high as, I think, 104,000 points. Yeah, so if you see any correction happening, and it's not a mistake, it's just, the bulls don't have the momentum to push up anyway. And we expect the bears, for them to lose steam, for there to be a form of momentum pushing back market. So what we are doing now is we are doing lower highs and lower lows. There's no threat so far. I know by this period, by end of the month or next one, we might start seeing some more of stability in the market.
Okay, so Abdulrasheed, very quickly, one word. Is the market going to close in the green or in the red? I just need that.
96,000 points is still my area of concentration.
So it's going to be. So it's going to be in the green.
It's going to close in the green.
Oh, we're going to hold on to that.
But it's going to be marginal. It's a marginal close for now. The market is out. It's going out of the.
Okay.
Thank you very much.
Thank you so much, Mr. Abdulrasheed Momo, equity trader, TLW Stockbrokers, for sharing those insights with us on Business Incorporated. Let's move on now to other markets. We go to the Gulf, the Middle East, where it was positive too at intraday. Abu Dhabi was up 0.09%. To see Dubai also in positive territory. Still within the region, Saudi was up. Qatar also in the green, doing not badly at intraday. Now let's scoot over to the US, where stock futures were mostly flat early on Tuesday after the S&P 500 and Nasdaq Composite extended their longest winning streaks of 2024. The Dow Jones Industrial Average futures dipped slightly, if you look on the screen there, by 0.01%, while S&P 500 futures hovered around 0.8%, and Nasdaq 100 futures saw a modest rise of 0.15%. Investors are gearing up for the Federal Reserve's annual Jackson Hole Economic Symposium this week, and all eyes will be on the Fed Chair Jerome Powell's remarks on Friday as Wall Street looks for any clues about what the Fed might do at its September meeting. According to analysts, the Fed wants to show they're in control, but also avoid acting too quickly. Also on the radar this week are second quarter earnings from home improvement retailer Lowe's. The results could provide insight into how consumer spending is holding up amid the current economic conditions. Let's see how Asia markets performed at the close of business today, Tuesday, as investors took a close look at the latest updates from the Reserve Bank of Australia. Japan's Nikkei 225 was up 1.8%, gaining back that 38,000 level. And this is thanks to strong performances in technology stocks, Over in South Africa, we see the Kospi also up in the green, 0.83%. However, there was a dip in consumer confidence with concerns about a potential U.S. recession weighing on the sentiment in that market. Now, on the flip side, Chinese markets didn't have such a great day. Hong Kong's Hang Index was down 0.33%, but this is the Shanghai market in mainland China. We see that composite also slipping 0.93%, and this was breaking a 3-day winning streak. This comes as China's central bank decided to keep its key loan prime rate unchanged, which was pretty much what everyone was expecting. Australia's S&P ASX 200 was up in the green, 0.22%, inching up there to close at 7,997 points. Although it did briefly cross the 8,000 mark earlier in the session, the RBA's, as the Reserve Bank of Australia's minutes from their August meeting, revealed that they are holding interest rates steady at 4.35%. But inflation is still a concern, stubbornly above the 2% target. That's what all eyes on, inflation numbers now. Central banks are watching that 2% target, trying to get the inflation to meet that target, and they're very cautious about how they're holding rates, either they're holding or cutting rates. They're not cutting too quickly, and they're trying to hold to ensure that they're making the right decisions. Yeah, and that's, I think, what the U.S. is also trying to do. They're not trying to make a move.
The U.S. has met its target. Their target is 3%, and their last inflation was 2.9%, but it seems they're still reluctant and checking if they should
cut rates in the future
or not. All right, Will, thank you so much for that. So now let's head to the UK now. Juliana joins us. Juliana, good afternoon. Well, King Charles is everywhere today. The coin, the £1 coin, is in circulation from today. Do you have one with you?
Indy, I was just, good afternoon, by the way. I was just going to start the discussion by apologising to you and our viewers, of course, because I don't have one of the new £1 coins. In fact, I think it's going to be very difficult to find, because anybody that lives in the UK knows most people don't use cash anymore. But that hasn't dulled the celebration, particularly for those who are notable collectors of coins, because the King Charles III £1 coin does go into circulation today. I think Royal Mint have distributed about 3 million of the coins to post offices and banks across the country. So I will try my best to get you at least one. I think one coin is worth, about 400 naira? I'm not sure. But, this is all part of the fact that he is the new monarch. I think that the design between Royal Mint and the Royal Horticultural Society makes sure that it celebrates the King's biodiverse interests. So in the ones that are released today at the back of the coin, there are bees. However, there are going to be 8 different designs. If you're lucky enough to get one, I would definitely keep it in your back pocket, because I think it was just last week, we were discussing the fact that the first polymer notes featuring the King's effigy was selling for 10 times the face value. So it's a great collector's item. But I was quite shocked when I was doing my research to discover that there are currently 29 billion coins circulating in the UK or under somebody's sofa that have the effigy of the late Her Majesty Queen Elizabeth II. So she is still very much around and in people's purses, and I don't think she'll be washed out just yet, particularly as we are becoming a cashless society.
Yeah, obviously, she's still very much around. But, not a very good one. The tech entrepreneur, Mike Lynch, missing, the sinking yacht and other important people also. I wonder how the business community is taking this news.
This is an absolutely bizarre story. Tragic, of course, and I suppose we should start with the main facts here, which is a significant rescue operation is still ongoing off the coast of Sicily, which is Palmero in Italy, because on Sunday night / Monday morning, there was a freak accident. Apparently, it's kind of like a 1 in a billion event, some sort of tornado, which tore apart, or shall I say sunk, this super yacht, which we believe was owned by the British tech tycoon Mike Lynch. As you said, he was considered the kind of British Bill Gates. That's how significant he was. And there were a load of people on board. So he is missing, feared dead, sadly, alongside his 18-year-old daughter, who literally just graduated from Oxford University with a degree in English. Not just him, Jonathan Bloomer, a huge name in the city. He was the chairman of Morgan Stanley International. His wife is also missing alongside him, and many others. Now, why do I say this is bizarre and growing in public interest? That's because Mike Lynch was involved in a 10-year US federal dispute that literally only closed. He was only cleared from that dispute a couple of weeks ago. It was about fraud and conspiracy, and it was tied to the selling of his firm Autonomy to Hewlett Packard for $1 billion in 2011. Now, he had a co-defendant in it, and his co-defendant, Stephen Chamberlain, who was the former vice president of his firm, he was also declared dead yesterday in a separate incident. Apparently, he was struck dead by a car in the States. Now, you know what X, formerly known as Twitter, is like. So conspiracy theorists are going through the roof. And so he was actually on this boat, Mike Lynch, to celebrate being acquitted from this case. So he took his lawyers, his bankers, his family, who are all now missing, feared dead. And we just heard that yesterday his co-defendant, Stephen Chamberlain, was struck dead. So it's a developing story. Let's see what goes on. But a really, really tragic, shocking, bizarre incident.
Yeah, it is. And it's double-fold now. And as you said, I mean, the conspiracy theory is going to just almost unending. Very sad right there, Juliana. But what are investors doing at this time?
Well, apparently investors they're all putting their money in gold, the traditional safe haven if you're not a Bitcoin lover. Gold has reached, I believe, about $2,500 an ounce, really rallying at intraday, and it continues that rally. The all share is down, though. It's down 0.60%. FTSE 100 in the blue chip index down to at 0.66%, and the FTSE 250, the British domestic market, that's down 0.16%. In the currencies market, the British pound is currently trading up against the US dollar by 0.12%, up 2 against the euro by 0.18%, but down against the Japanese yen by 0.12% at intraday in.
Thank you so much, Juliana, and we'll wish you guys the best with all of those sad stories. Now we head to American aircraft maker Boeing is the topic at Germany now. It's in the news again, and this time it's because of a damage found in a crucial part of the 777X model. Let's have joining us for this Wada. Wada has details of this and more. Hi, Wada. Good afternoon.
Thanks for having me, Eni. The year 2024 brought added spotlight to Boeing, and it hasn't really been positive press. Now, Boeing has halted all test flights for its 777X model, which was supposed to be a successor to their popular 777 Dreamliner airplanes. But the latest tests have found a damage in a crucial part of the airplane. That's where the engine is. And the company has said that the component did not perform as intended, and so they're replacing the part, doing more research, and will only resume these test flights when the aircraft is in shape and ready. Now, it seems that a similar issue was found in the test fleet of the model 777-9. It's important to note that the 777X model was meant to be launched and in operation by 2020. That was 4 years ago. But now in 2024, the wide-body aircraft is still in its testing phase. But better safe than sorry.
Yeah, better safe than sorry. And quality control is also a topic of conversation.
Well, since the start of this year, Boeing's lax quality control measures have made the news and resulted in multiple investigations, and drop in sales, and an overall hit that the image of the company took. Only yesterday, regulators from the US ordered inspections of pilot seats on hundreds of Boeing 787 planes, which include 3 different models, following an incident which happened this year in March, where one plane suddenly plunged during the flight. And this led to multiple passenger injuries. The The reason why the US and its Federal Aviation Wing are investigating this is because of a report which suggested that this plunging midair could have been because of a movement in the captain's seat. And as far as how this company is tackling it, well, its new CEO, Kelly Ortberg, who only joined days ago, has been making rounds of production facilities. And he's been talking about taking quality assurance more seriously.
Yeah, so let's turn attention to the markets. What are investors doing?
Well, investors are looking at the Chinese central bank, which left its lending rates at the same after cutting 10 basis points last month. But markets are expecting the Central Bank of China to cut its rate again this year as economic growth in China remains slow. Eyes are on Beijing as it tries to achieve its 5% growth rate for this year. Markets and investors are also keen on stories about big tech companies. They're facing a harsh year here in the EU. Tech regulations in the form of competition laws have given major companies a shock. And gold bars are growing in worth. For the first time ever, a bar of gold is worth $1 million. That's because the price of gold per troy ounce stood at $2,500. And with a bar weighing 400 ounces, it rounds up to $1 million.
Yeah, everyone is looking the way of gold at this time, Wada. Thank you. All right, now let's move to the African scene, see what's happening. The first thing we can tell you is that Egypt is increasing electricity prices for households and is going to be up about 50%. That's because the country is gradually phasing out subsidies as part of an agreement with the International Monetary Fund. And this information has been shared by the Electricity Ministry. The new increase in electricity prices was applied on Saturday for the prepaid meter system and would be applied for regular meters from October 1. The raises range from 14.45% to 50% according to observations. Still in Egypt now, the open market operations. We can tell you that the Central Bank of Egypt has withdrawn 1.058 trillion Egyptian pounds through an open market operation aiming to influence interest rates and manage excess funds. The CBE accepted bids from 31 banks at an interest rate of 27.75%. This follows a recent change in bid acceptance policies. To boost its monetary policy tools, the CBE has overhauled its open market operations since April 2023 this year. And the Egyptian Central Bank uses a full allotment system, allowing all eligible banks to participate in weekly auctions, rather than a previous allocation-based approach. These measures are part of the CBE's ongoing effort to better manage liquidity and maintain interest rate stability in the interbank markets. And then we go to South Africa, where the Nigerian High Commission has hosted its second annual executive breakfast meeting in Pretoria, South Africa. The event gathered members of the Nigerian community and key stakeholders to discuss critical strategies for economic growth and development.
The event served as a platform for open dialogue and collaboration, bringing together key members of the Nigerian community, business leaders, and government officials. A central focus of the meeting was on strategies for economic growth and development, with discussions centered on how Nigeria and South Africa can further strengthen their bilateral ties. Dr. Ibrahimo Bello from Technical Lead gave a keynote address.
In our early days, in our undergraduate days in Nigeria, there's a quote that they used to say to us, and the quote would go something like this: perspire to acquire the desire you admire, do not retire, even when you feel tired, but refire in order to acquire that desire you admire.
The meeting wasn't without its challenges. Several concerns were raised by the Nigerian business community. The Nigerian High Commission in Pretoria, Ambassador Alexandra Timotope Ajayi explains.
One of it is that regulatory framework, because from the Nigerian side, the perception is that South African environment, business environment, is not really welcoming You understand? Because of a lot of regulatory regimes that is in place, and also the fact that we have had businesses in the past who made an inroad into South Africa, but they could not competitively compete.
South Africa's former Minister of Social Development, Lindiwe Zulu, emphasized the importance of leveraging each other's social and economic strength to drive mutual prosperity.
And so the relationship between the two countries is an old relationship which dates back to the time of liberation struggle. Nigeria supported South Africa through the African National Congress, through the Pan-Africanist Congress to free South Africa. South Africa is free now.
Nigeria and South Africa are, how would I call it? Could I describe it as inseparable twins? Because they are strategically positioned in Africa and they are the pace setters.
As the event concluded, there was a sense of renewed commitment from all sides to work together in addressing these challenges and unlocking new opportunities for growth. From Pretoria, South Africa, Innocent Simosa, Channels Television News.
All right, from South Africa, let's touch on Ghana just a little bit more before we head to the crypto space. Considerable market volatility has continued to impact key cocoa markets in Ghana and the Ivory Coast in the wake of a 15% drop in New York futures prices from over $9,000 a ton to $7,300 at the beginning of this week. The sudden dramatic drop in values has been attributed by some financial observers to wider U.S. stock falls that cut across a number of sectors, including agricultural commodities, adding to a further picture of uncertainty. And this follows a similarly mixed global picture of cocoa prices last month, with the ICCO reporting an observation of much higher price increases in Europe than the United States, and was likely to relate to the fact that the main destination of beans from Ivory Coast and Ghana is Europe. And with the low supplies from the leading producers, it suggested that this was behind the subsequent shortfall in Europe and consequent price increases. Well, now let's head to the crypto space and see what's going on there. And looking at the prices, if we take our eyes to the board at this time, there you see it. It's a very different color from what we had yesterday. We can see that Bitcoin has gained up. Well, from about $58,000 that it was at this time yesterday, it's now 60. After I went about 4%, almost 5% actually, 4.79%, almost 5%. Right, the Ethereum has also recovered at $2,660.58. It went up more than 3% in the last 1 hour. And then BNB also, we see a lot of greens right there, Cardano, Solana, and a whole lot of green is what we see at this time. Doge is also green. And so it's looking a bit pleasant, at least better than the color that we had yesterday at this time. But let's see some of those headlines. The U.S. Securities and Exchange Commission has turned down 219B to 4 applications for spot Solana ETF submitted by CBOE BZX on behalf of issuers, according to a report from the block. Following this rejection, the applications were removed from CBOE's website, and sources reveal that SEC's primary concern involves classifying Solana as a security, a viewpoint that the agency has previously articulated in court documents. So there we go again, regulation conversations going on around crypto, and now it's Solana that's on the front burner. And we hear that the Securities and Exchange Commission in the United States has now rejected calling it a security. But of course, this is not the beginning. I guess it's not also the end of this conversation. We'll see what comes up as updates on that. And then also, we see that the crypto exchange and Web3 company BitGet has announced the integration of Apple Pay and Google Pay into its platform, enabling users to convert fiat currency to cryptocurrency within 30 seconds. Wow, and this move is part of Bitget's strategy to enhance accessibility and streamline the crypto purchasing process for more than 650 million users. I wonder what this will do. To that space, that tap 650 million users with new payment options, talking about crypto exchange taps. Now let's find out what Olumide thinks of all of this. Hi, Olumide, good afternoon. Welcome to the program. First of all, could you help us understand what has moved the markets? We see Bitcoin has gained about 4%. I mean, between yesterday, 24 hours this time, yesterday, we saw Bitcoin at about 58,000. Now we see it over 60,000. What's the driver?
The driver is risk. We're seeing the appetite for risk improving significantly. You see the Nasdaq and the S&P 500 on an 8-day winning streak, the best this year. That also triggered some positivity around the crypto market. And, if you look at the chain analysis data, you will see that the market got squeezed. So we saw a significant amount of short sellers liquidated. So that really amplified Bitcoin, skipping the 60,000 straight to 61. But you could see that it seems like the market is cooling. What market makers will be looking at is what the US Fed will speak around interest rates. Interest rates really has a strong correlation in the crypto market. If rates still remains high, definitely the appetite around the crypto market will be moderated. And also look at inflows. Inflows this in the last couple of days has been at the highest level this month. So that also sprang in some positivity. And just like you highlighted, adoption, widening space in the crypto space, that also brings in. I think back home, Nigeria, I think where the excitement is that now the federal government have seen the use case in the crypto industry. So now the Security Exchange Commission is trying to see how to regulate crypto exchanges. You saw that the FRC chairman some days ago spoke about the fact that they definitely will look at generating tax revenue from that space. So it seems like it's been a really busy moment locally and internationally.
Obviously, Olumide, thank you so much for that. And of course, I know that you are looking at that space. I'm talking about the FRS boss and what he said, and that regulation that should be coming the way of crypto users in Nigeria. Thank you so much, Olumide Additional.
Thank you for having me.
So that's it on the program today. Thank you so much for being a part of Business Incorporated. Don't worry, we'll have another episode tomorrow. We'll start from 10 a.m. and then we'll do 1 p.m. I'm John Mekwa. Enjoy the rest.